Owning physical gold and silver is a time-tested way to safely store wealth, mitigate financial risks, and gain peace of mind. For thousands of years, gold and silver have been used as currency. In fact, prior to 1971, the US dollar was backed by gold. We were, in essence, on a debit system. Since decoupling from the debit model, the US has binged on debt to the point where our national debt has surpassed our GDP every year since 2012. For obvious reasons, this practice isn't sustainable. By creating dollars out of thin air, we're devaluing what each dollar is worth. I'm Nathan with the NGC team, and this video is why you should own physical gold and silver. Adding physical gold and silver to your holdings balances out all your dollar-based assets. I guarantee that almost all your assets are tied directly to the dollar. Your savings, real estate, stocks, bonds, annuities, Social Security, everything. You need something to provide a counterbalance, which is exactly what gold and silver do because historically they have an inverse relationship with the markets. When the stock market and real estate prices fall, that's typically when precious metals rise. With the dollar continuously being devalued by inflation, the current economic uncertainties, and the financial storms on the horizon, now is the time to own physical gold and silver. So why physical instead of an ETF or mutual fund? Well, if you were on a sinking ship, would you rather have a certificate for a life jacket or actually have that life jacket wrapped around your chest buckled in? With physical, you know you own the metals and they're there for you whenever you might need them. As you can see, making a 10 to 15% allocation into physical gold and silver helps truly diversify your financial portfolio. In a long-term position, it retains your original purchasing power and acts as wealth insurance during market depressions. If you'd like to learn more, contact your advisor and watch our next video on how much gold and silver you should own for wealth insurance.